Better System Trader, episode 27.
Welcome to Better System Trader, the podcast to help systematic traders of all levels improve their trading. We'll give you loads of expert tips and practical advice on system design and validation, money management, trading psychology, and many other topics. Whether you're just starting out or a savvy systematic trader, we're here to help you improve your trading and find more success. This is Better System Trader with your host, Andrew Swanscott.
Welcome to the Better System Trader podcast. This is episode 27, and I'm your host, Andrew Swanscott. This week's episode is sponsored by Quantocracy.com. They provide a curated mashup of quantitative trading links, so it's a great way to keep up to date with all the great trading stuff being released. I use the website regularly, and I know a number of other podcast guests do too, so head over to Quantocracy.com and check it out. Now onto the show. This week's show is very timely considering the markets the last few weeks. The guest is Dr. Gary Dayton. He's been an active trader since 1999, trading equities, futures, and options. He's a psychologist and president of a consulting firm that specializes in developing peak performance in traders. What I found interesting about Gary is his approach to trading psychology is very different to the traditional approaches used by other trading coaches, introducing traders to the practice of mindfulness to not only overcome fear and other unwanted trading emotions, but to develop the concentration and focus needed to trade successfully. In this episode, we discuss why traditional approaches to controlling emotions don't work, the role of emotions in trading, and how mindfulness can improve trading performance. He also shares some tips on how to get started practicing mindfulness, the benefits it can have outside of trading, and how the approach of mental parking can increase focus. We also have a giveaway for this episode, so listen out for that at the end of the interview. Also, just a warning, there is a small section of the recording where the sound quality ain't so great. It doesn't go for long, perhaps 30 seconds, but make sure you hang in there because it comes good just as Gary makes a fantastic point, so you don't want to miss the insight he shares there. Anyway, let's get to it. I hope you enjoy the chat with Gary Dayton. Thanks for joining us today, Gary. Can we please start by just giving us a little bit of background into who you are and how you got into trading?
Sure. Well, thanks for having me, Andrew. It's a pleasure to be here. I am a psychologist, first and foremost. I was trained here in the United States as a clinical psychologist, which is dealing with people with mental disorders like depression, anxiety, schizophrenia, and that sort of thing. But I also had the great opportunity to learn sports psychology while I was at university. Sport and human performance psychology from a renowned sports psychologist. It was a real treat to be able to learn under him. So I had that aspect to my psychological training. And I got into trading. I'm also a trader, primarily in the futures markets, the S&P E-minis, occasionally the currencies or oil futures markets, that is, and some stocks from time to time. But I also advise hedge funds, a couple of hedge funds, on their stock. They're primarily equity funds. So I get involved in a lot of stock selection and stock investments and trading. But I got into trading myself. Excuse me. I received a pamphlet, actually a little booklet in the mail. And now in retrospect, I understand that it was pure marketing. But at the time, I was just fascinated by it. And I couldn't believe how you could just buy low and sell high and make a ton of money. And I wound up buying whatever it was they were selling. I bought that program and I received it, and it was like a manual with a bunch of charts and stuff. And I stayed up all night reading it and I read it twice through the night. And I was, at that point in my life, that was not unusual for me to stay up all night, but I was so fascinated by it that I just got hooked right then and there. And that was about 1998, 1999. So I've been trading about 15 years, pretty much consistently since that period.
So were you actually a trader first and then a psychologist, or the other way around?
Well, it was kind of coincident, actually. I was just finishing my doctorate in psychology when I got that pamphlet, and so I started trading right around the time that I got my doctorate.
Right. Okay. So you mentioned that you studied some sports performance. What are the similarities between sports performance and trading performance?
Well, there's certainly a lot of differences between athletics and trading. The obvious one, of course, is the athleticism that goes into sport. That we don't have. We don't have to be doing sprints and physical exercise when we trade. Mm. But the mental aspects are very similar. Athletes perform. I was just at the U.S. Open tennis championships, the round of 16. Now they're going into the quarterfinals. I was down there this weekend in Flushing, New York. And when the athletes who are really performers, that they walk out onto the stage, it's quite an ordeal for them. The music's blaring, the fans are screaming and cheering, and lights are flashing, and all of that. This is indoors in the main stadium, and you can't help but feel the pressure when you walk into that kind of a venue. So trading, of course, we feel that kind of pressure. Some of us, every time we get into a trade, most of us, we feel some degree of pressure every day, or if we're more of a swing or position trader, each week. Tim Borkin had done a book called Traders at Work. He interviewed 200 very successful traders. And one of the surprising things that he found, I wasn't surprised about this, but he was surprised about it. One of the things that he found was that even after 20, 25 years of very successful experience in trading, traders still felt uncomfortable in their trading chair. They would get into a position and they would feel the anxiety that goes with it, because there's always risk, of course, of loss, and that does, no question about it, produce a level of fear or anxiety. So even well-experienced, highly successful folks still have this emotional reaction to the markets.
Yeah, okay. So you've released a book on trading psychology called Trade Mindfully, which is quite different, I guess, to traditional trading psychology approaches. Before we get into that, perhaps you can, you've just described some of the common problems that traders face, but can you explain some of the traditional approaches that traders use to control those emotions?
Yeah. Typically, the trader will try to exert psychological control, to try to suppress their emotions. I won't have fear. I won't have greed. I'm going to act in a certain way. Well, that doesn't really work for a whole host of reasons. But just to give you I've been a psychologist now I've been practicing psychology for over 20 years at this point. And I've never met a single person who was able to control their emotions on a consistent basis, ever. It's just not possible to do. Emotions are part of us. They're part of the human experience, and they're part of our makeup. And to try to control something that really is useful for us is the absolute wrong thing to do. And so, my book departs from the typical trading psychology manuals or books that say, get in there and control your emotions, be robotic and all of that. I don't think that's possible. And for the traders and investors that I've worked with, those who are and everybody does this, they try to, get rid of emotions, these negative emotions, because they're uncomfortable, no question about it. But they wind up distracting themselves off of the market and off of their trade, and then problems arise from that.
Yeah, okay. So you just said that there's a whole host of reasons why those traditional methods don't work. Can you share a couple more with us?
Sure. And, I would encourage anybody listening to this, because it probably does sound very contrary to their thinking. In fact, when I first saw the kind of approach that I eventually adopted as my own psychological approach, it's based on what's called acceptance and commitment training, or acceptance and commitment therapy in a clinical sense. I first saw it back around 1999, 1998, as I was just becoming a licensed psychologist. And it was a person who had a woman who was suicidal. She was ready to kill herself because she was so depressed. And it was a videotape that I saw at a conference of psychologists. And in one session, 45-minute session, she turned herself around and was no longer suicidal. And at the time, I didn't understand it because it was so contrary to what I had been taught as a psychologist and had been practicing for 5 or 6 years at that point as a budding psychologist. But I knew something was really potent there, that there was something to really understand. Even though I didn't understand it, I knew there was something useful there. And I began, at that point, there was not much written on this approach, but that's all changed. Now there's an explosion of books on it because it has been so successful and it is so powerful. But the basic idea here, when we go to suppress our emotions, is that it's really impossible to do because, and there's been a lot of research coming out of Harvard University, one of our major universities here in the U.S., for the past 30 years or so. And it kind of goes like this, that when we tell ourselves not to be afraid or not to have fear, we're kind of giving our mind a command to not have fear. Well, the mind says, okay, fine. But what it does is it says, I'll monitor, and any fear that comes up, I'll let you know. So immediately, any little bit of anxiety, we get into a trade, for example, and it starts to tick against us. And immediately that will trigger some anxiety in most traders, or in many traders. And we've given the mind that little command that I'm not going to have fear. The mind is scanning for it, basically. And it brings it right up into our attention. Fear is here on the horizon. Better gear up for it. And so even though we try to get rid of it, even though we don't want it, we got it. And it's as simple as that. It's as simple as that.
Yeah, I think you had an excellent example in your book about the US Airways flight that hit the flock of birds and was forced to land in the Hudson. Mm-hmm. Can you share perhaps the story or the lessons from the captain's response to that incident?
Sure. It was big news a few years ago when he took off from LaGuardia Airport in New York and flew over the city and managed to hit a flock of geese. And they got into the jets and stopped the engines from running. And he knew it immediately. And he tried to, assess his situation. There were local airports in New Jersey and also in New York, but he was at such an altitude and at such a speed that he knew immediately that he wasn't able to bring the plane to one of those alternate emergency landing spots. And his only choice was to put it into the Hudson River. Now, this was March, and the river was choppy. It goes into the ocean, into Long Island Sound. And it was interesting because there was a Good Morning America broadcast interview of him a week or two after this event. And Katie Couric, who was interviewing him, asked some really interesting questions, some insightful questions. She said, well, Captain Sullenberger, were you worried about the patient, worried about the
passengers?
Yeah, passengers. I'm thinking patients as a clinical psychologist, right? Sometimes it does that. Sometimes my mind does that. Yeah. Were you concerned about the passengers? Were you thinking about praying for them? And he said, well, no, there were people there. The crew was there to deal with the passengers. And I figured the passengers themselves were praying. What my job, he said, was to level the wings, get the nose at the right attitude, bring my airspeed down, not too low, but not too high, and try to gently bring this plane into the drink, as we would say here, into the river. He said something that was really telling. He said the physiological response I had to this was enormous, meaning that he was scared and that he felt it in his body. When we become frightened, three things happen. Our minds get focused in on the threat. Our emotions swell up within us, that fear, that trepidation, that apprehension, and that all the way right to abject terror. And our body responds. This is part of the fight-flight syndrome. We start to get muscle tension. We start to get sweaty palms, clammy palms. Our stomach might churn. We get dry mouth. It feels very uncomfortable. And he noted those. Sullenberger, Captain Sullenberger. Think about it. If you were in a plane and you had 135 passengers and crew on board, and you're holding their life in your hands, and you had never done this before. He had trained for it, but he had never done it before. He was scared. And he said it took all of his focus, all of his effort to keep focused on the right things. The leveling of the wings, the attitude of the nose, all of those things that a pilot does. And then he successfully landed. But he was scared, totally scared, but did it anyway. And that was the point. He didn't try to suppress his fear. If he did that, he would have taken his attention off of what was important. And what was important at that time was to land that aircraft and all the technical things he had to do to accomplish that goal. So focusing on the fear would have been the wrong thing. That's what we all do. And to bring it into trading, that's kind of what traders do. We focus on the fear. We try to suppress it. We try to get rid of it. And therein lies the rub. We get distracted off of our trade. Our focus goes internal to our, the body sensations, the emotions that we feel. And it causes us to cut a trade short or not pull the trigger or ironically hang on to a losing trade until it becomes so painful that we have to take the loss. But we get distracted from good trading. And ironically, what happens is that we repeat this pattern over and over and over again. And it's not only is it unworkable, but it causes traders to really never learn how to manage themselves and manage their trades properly. And so they get caught into this vicious cycle where they have the fear response, their attention goes inside, they try to deal with it, and they never really learn how to trade well. And that's unfortunate, but that's what happens to the majority of traders that I've worked with anyway.
Yeah, so for those traders that are using the traditional methods to try and address these thoughts and feelings, is there any way or any exercise that they can do to actually identify whether their method is working or not?
Yeah. Here's my suggestion. Don't take my word for it. Your experience as a trader, and I'm talking to your listeners now, yep. Your experience as a trader is always going to trump what anybody else says. It doesn't matter who they are. It has to fit for you. It really does. So my suggestion is this. Take some time, take 10 or 15 minutes, and just go through all the things that you've done. If fear is a problem for you, go through all the things that you've tried to manage your fear. Whether it's reading self-help books, whether it's going to a trading psychologist like me, taking herbal supplements to calm yourself, doing exercise to exhaust yourself so you don't feel the emotion so much. All of those things that you've done, write them down and include things that you've done trading wise, cutting a winning trade short to avoid the negative emotions and the negative feeling states. Write all that stuff down. And then once you have that list, assess, have these been helpful for you? Has this really worked? And my informed judgment, if you will be to say that they haven't worked. I mean, maybe some have for you, and that's great. Do more of that. But if you're still struggling with fear, which is what most traders have difficulty with, and you've tried a number of different things, recognize that that's not working. And you don't want to, the sort of lay definition of insanity is to continue to do things that don't work and expect that they will. They're not going to work. So understand that, recognize that. But again, do it based on your own experience, not from what I'm telling you.
Yeah, sure. So I guess if trying to eliminate emotions doesn't work, that really implies that there is a place for emotions in trading. Can you share a little bit about that?
Yeah, it's interesting. The neuropsychologists, the psychologists who deal with the brain, have looked at folks with brain disorders, what we call lesions or scars in certain parts of the brain. And they look at the part of the brain that's responsible for the fear response. It's called the amygdala. And actually, it's a network of areas in the brain, but that's the primary one. And so they have found people who have damage to that and don't really have fear. And the interesting thing is that they aren't able to really act in their own best self-interest. They've done studies similar to trading where they do they use cards, playing cards, and certain cards have value, and if you get those cards, you'll get rewarded. But then they change the reward structure in the middle of the exercise. So somebody with brain damage versus somebody who doesn't have brain damage, they'll be making bets, if you will, to gain those rewards. And then they change the rules of the game without telling the participants. But basically what they do is the old rewards don't get rewarded any longer. The previous method doesn't get rewarded. Mm-hmm. Now it's a different thing you have to do with the cards. So people with normal brains, undamaged brains, they pick that up really quickly and they start changing their strategy to compensate for the new reward structure. Folks with damage to the amygdala don't have that at all. They continue to press their bets on what's no longer working. Take that into trading. It would be as if we bought all the way up on a bullish market, bought every little pullback that came along and made money. But then the market turns. We're now in a bear market. If we didn't have that fear response, if we didn't have that emotion available to us, we would continue to buy, even though the market is falling down and down and down. We'd be buying and buying and buying and buying and wipe out our accounts because of that, because we just don't have that very important piece of emotional information.
There was actually quite a nice study in your book. I think it was a group of prop traders or market makers, perhaps in London, where they were studying the impact of emotions on trading. Can you share a little bit about that study?
If I can remember it. There's been several studies of traders, and the UK actually does a lot in trading with traders. The study I think you're referring to, and correct me if I'm wrong, is that the traders who are more experienced and have gone through market cycles and emotional cycles, recognize when emotion comes into play. They certainly feel it. It never goes away. Yeah. But they are better able to stay with their trade if the trade is working, or stay with their investment if the investment is working. Newer folks, or traders who are not that adept at handling their emotions, or who are inexperienced, they have limited experience, they feel the emotion and they do things to try to solve their emotional response, the uncomfortable or the discomfort from the emotion. So they'll take trades off. They'll walk away from their trading screen. They won't participate in the market because they feel uncomfortable. They feel fearful. Mm-hmm. Or they will start trading smaller size. Now, you might think, gee, that sounds like a good idea. If you just had a loss and you're fearful, taking a smaller, reducing position size sounds like a reasonable thing. Now, in certain circumstances, it can be reasonable, but in general, you are trying to assuage your fear by doing something that's external to you. You're trying to do it by position size. That's not the right approach. The right approach is to deal with internal stuff with internal methods, deal with, position size and other external issues in an external manner, not try to mix the two. But we all traders tend to do that.
Yeah, sure. So I guess the experienced traders did actually feel the emotions, but they were still able to trade successfully. I mean, they recognized that those emotions were there, and perhaps they used them a little bit in the decision-making process, but they were still able to perform. So,
right. And they also recognized, some of them, the most skilled of the lot, recognized that if they were feeling the fearful emotions, well, the rest of the market and the participants in the market would also be feeling it as well. And they were able to utilize that emotional response as valuable information regarding what other market participants were feeling. And they would bring that into their trade decisions and make, in fact, more effective decisions than those who were, walking away from their trading screen or not making trades.
So I think that study kind of aligns nicely with the mindfulness concept in your book. So perhaps we'll move on to mindfulness a little bit. Can we start by explaining what it actually is? What's the concept of mindfulness?
Sure. Mindfulness comes from the ancient, over 2,500 years ago, East Asian Indians and Buddhists started practicing mindfulness. And it probably dates even farther back than that. There's evidence from cave dwellings that go back to cave art that goes back 3,000 years, that people were practicing mindfulness in that area of the world. So you might say to yourself, what in the world could something that's 2,500 years or more old possibly be of relevance to me today, when we have internet and all this global instant global news and so on and so forth? Well, the answer is it actually has a lot of benefit. Psychologists have learned about mindfulness and started studying it, and they began to do a lot of research over the last 10 or 15 years. And in fact, it's enjoyed quite a bit of good research, still kind of in its infancy. But there's been enough research for us to know that mindfulness is really a very powerful method and technique that we can use. And for traders, it's a really useful mental skill to develop. All it is sitting down quietly in a formal way. You can do this informally, and I'll explain that as well. But in a formal sense, the classic way is just to sit quietly with no distractions, no interruptions from the phone or the email or your family or friends, and to focus on one thing. Just allow your mind to sort of rest on what we call an object of focus. Now, the classic way to do this is to focus on the sensations of your breath, coming in, what it feels like, and going out, what it feels like. And you'll quickly find when you do that, you won't be able to do it for very long. I would almost bet that for most people who've never experienced this moment of mindfulness, sitting down and watching the breath or resting the attention on the breath, I think a minute will go by and you'll find yourself totally distracted by other things that your mind is telling you. Oh, how boring is this? Or what are we going to do for dinner? Or are we going to meet our friend at the pub, at 4 o'clock? And what should we wear? Or, all kinds of mental chatter will go on. And that's the first thing to recognize through mindfulness, is that you don't have control, and I don't have control over what our mind does. It's almost automatic that it just generates all these different thoughts. And the issue for us, because we've been since children, for as long as we can remember, we've been relying on this thing called the mind. And it's incredibly useful. It, helps us solve problems, helps us negotiate our way throughout the course of the day. It's created the ability for people to land on the moon, and Captain Sullenberger to land his jet in the Hudson River, and the information superhighway, and our computers, and all these great things that we have. And that all comes from the mind. So we're not throwing the mind out. But what happens is that psychologists believe that we overuse the mind. And we believe everything that it tells us. So when we're in a trade, for example, and we start to see it tick back against us, and the mind starts to flash the warning signs, you're about to have a loss, or you're going to give back profits, better get out of the trade, and it creates that whole cascade of discomfort that we all often feel. We believe it. We buy into what the mind is telling us. And the mind is trying to protect us. It's doing, a service to us. But because we believe it so wholeheartedly, it's really doing us a disservice. So mindfulness begins to help us understand that the mind is just kind of going off on its own. We don't really have all that much control over it. And it also begins to help us recognize that what the mind is telling us all the time is lots of times just isn't true. It's not a real accurate reflection of reality. And mindfulness also allows us now to begin to step back from those thoughts and feelings that we're having that are generated pretty much automatically from our internal state. It allows us to step back from those and say, oh, yeah, here we go. Another one of those scary thoughts coming in, or, oh yeah, uncomfortable feeling. I know this really well. And mindfulness allows us to step back and say, what's really important here, both for me as a trader and for the trade that I have on. And if it's to hold that position, it'll still feel uncomfortable, but mindfulness is going to allow us to be able to do that much more readily than virtually any other method that I know from psychology. And a good part of that is because really what we're doing is we're building a mental skill. And mindfulness also has a big spiritual component to it. But I'm not talking about becoming enlightened or getting close to God or whatever you might believe in terms of your spiritual world. It certainly is valuable for that. And there's you can pursue that if you like, but I'm not talking about it that way. I'm talking about it just as a pure mental skill. When we are focused on the breath and a distracting thought comes in, the whole task in mindfulness is to recognize that distracting thought and bring our attention back to the focus of the object of focus, which in the case that we're talking about here is the sensations of the breath. It's almost as if we're sitting on our porch watching a parade go by. And we might find, somebody in one of the marching bands to be, one of the bands being wearing colorful uniforms and playing really nice music, and we can enjoy that. But we don't run off of the porch and into the parade and start being the majorette or the drum major here and marching down the road as part of the parade. Mindfulness allows us to keep ourselves out of the parade, so to speak. When we're not mindful, we tend to jump into the parade and we're off on some different tangent now suddenly that our mind has created. And so mindfulness is very effective in doing that.
Yeah, okay. If we can just take a quick step back, you mentioned that there's been some research on mindfulness. So what evidence is there that mindfulness can actually improve trading performance?
Yeah, there's actually quite a bit of it, and it's coming out almost weekly. It's hard to keep up on all the research, but remember we talked about the amygdala, right? That fear center. Well, one of the early studies in mindfulness took people, average healthy folks, not people with mental disorders, but people who were just stressed. And they put them through a program where they had them practice mindfulness for, it was actually 27 minutes a day, 30 minutes a day. And they did this over 8 weeks. And they did a brain scan of these folks beforehand and then at the end of the 8-week period. They also had a control group or a group that didn't practice mindfulness, and they did the same brain scans before and after the 8-week period. And what they found was absolutely remarkable. The amygdala, that fear center that we have, actually shrunk in size. The brain structure began to diminish. Now, we know from lots of research that when we can shrink the brain like that, and we know from the self-report, the stress response diminished as well, and the two go hand to hand. Other studies also found that the executive center of our brain, where we think and where we plan and where we make decisions, and also which happens to have some control over the fear areas of our brain, that grows with mindfulness practice. So our fear response becomes lessened and our critical thinking becomes greater through the practice of mindfulness. Now, I don't know anything else in psychology that can do that. And also, just to kind of play this out a little bit more in terms of trading, the fear response, they've shown that loss aversion, when we're under the throes of loss aversion, and they put traders in MRI machines, the magnetic resonance imaging machines, to take scans of the brain, that the amygdala, when people are under the threat of loss and fearing the threat of loss, that the amygdala area lights up. In other words, that becomes activated when we fear loss, when we have loss aversion. So mindfulness quells that response, changes the brain structure in positive ways for us, and it's directly relevant to trading.
Okay, so it sounded like your the mindfulness example that you gave earlier sounded very similar to meditation exercise. Are they the same, or is there a difference there?
Yeah, basically they're the same. I mean, for our purposes, it's really meditation, and mindfulness are the same. Mindfulness is a little bit broader than meditation. Meditation is what I described there of watching the breath. That's a classic meditation, formal meditation practice. Mindfulness is a little bit broader than that. You can do mindfulness when you're washing the dishes or brushing your teeth. For example, if you're washing a dish, and I would encourage this for your listeners, try doing this. Your spouse will be happy that you're washing the dishes, if nothing else. Right? But as you're washing the dish, notice the water, the temperature of the water rolling over or flowing over your hands. Notice the slickness of the dish soap that you're using, the texture of the sponge or the dish towel. Notice all of that and be really, if we're washing a dish or if we're brushing our teeth is maybe even a better example. When we're brushing our teeth, we're thinking about everything that we're going to do during the course of the day. At least I am. So slowing down a little bit and just being mindful of what we're doing and keeping ourselves in the present moment rather than we're very much frequent flyers, if you will, into the future or back into the past. And it's our minds that do that for us. And again, it can be useful if we're trying to figure out how to build a better mousetrap or doing project management or creating a trading system for ourselves and analyzing trade setups. It's great. That's terrific. When we are dealing with internal stuff, however, it's not so good because we're trying to solve a problem that really isn't a problem. And mindfulness helps us to recognize that. And so you can when you're brushing your teeth, notice the flavor, notice the bristles against your teeth or against your gum, the temperature of the water, how that feels in your mouth, and so on and so forth. That's being mindful. That's bringing us into the present moment.
Yeah, there was a nice little section in your book where you had some examples of actions that traders make when they're, I think you called it mindlessness, and then the mindful equivalent of that action. Can you share a couple of those examples so we can put it more in the context of trading?
Sure. Let me give you an example of one that I think every trader understands, and that's cutting a winning trade short. We get into a trade. Let's say we go into a long trade. So we're long the market. We've bought it. And the market runs in our favor. And let's say we've got a target of, 10 points out there for our stock trade. Okay. And the market rallies up and it goes 4 points in our favor. And we think, oh, that's really good. Then it starts to back up on us. And maybe it comes down half a point. And the mind starts kicking in. And it says, oh, Gary, you better get out of this trade. You've got 3.5 points in it. That would be nice to bank. Let's take that trade off. You don't want to give up any more profit than you already have. And you surely don't want to have a loss. Okay. And I might say at first, oh, okay, well, I'm going to stick this through because my target is another 6.5 points away. But the mind starts getting insistent. And it starts, almost as if it's screaming at you. And you feel the discomfort. The more the mind is screaming, the more, for me, my shoulders are going up into my ear, the muscle tension, and my mouth gets dry, my stomach gets queasy. And it feels uncomfortable. So I take the trade off, okay? And what happens? Almost immediately, I feel relief from getting away from all that stress. And I'm also patting myself on the back. Gary, you did pretty good here. You got 3.5 points on this stock trade. That was cool. Yeah, I know it was going to go. Your target was 10 points, but you got that. Feel good about yourself. I do feel good about myself, and the stress is draining away. But then, shortly afterwards, the market starts moving again in my direction. The stock is pushing up now, 5 points up, 6 points, 8 points. It's even gone beyond. It's gone 12 points. What's my mind telling me then? Well, I can tell you exactly what my mind would tell me. It would say, Gary, you idiot. Why did you take that trade off? You had this target of 10. It's even gone 12 points. You could have made a ton of money on that. You only got 3.5 points. When will you ever learn to trade well? And it starts spewing out all this toxic chatter to us. It's toxic nonsense. And now I'm feeling bad, right? Now I'm feeling down. I'm feeling sad. Oh boy, I'm just not a good trader. And I when will I ever learn how to trade? And I kick the dog. I'm unhappy, right? Take my frustrations out. Well, here's the rub on this, or here's the issue on this. Traders never stop to ask this question. But it's a really important question, and I'll bring it back around to mindfulness. Which mind was correct here? Which mind was right? Was it the mind that was telling you to take the trade off for fear of loss, or just moments later telling you were an idiot for doing exactly that and making you feel bad about doing that? Well, Traders never ask that question. And the sad thing is, the poignant thing, because we're human, is that we believe both minds. We believe the mind when it's telling us to take it off, and then we believe it that we're an idiot. You know, we were stupid for doing the exact same thing that it just told us to do. And that's what I'm talking about here. We're being whipsawed, if you will, between our different minds at any given moment. And because we've been brought up to trust this mind so well, since when we first began to be aware, consciously aware, we've learned to trust the mind. But it's not always our friend. And that's where mindfulness comes in. It helps us step back. It's almost as if we're holding our thoughts at arm's length. When we practice mindfulness just a little bit, we start to be able to do this. And we begin to say, is this really the right play, the right action that I want to do here? What's most important for me as a trader and me as in my trade that I have on? Is it to take the trade off, or is it to hang in there and see if I can't get more out of this trade? And that's where mindfulness really shines.
Okay, and regarding the practice of mindfulness, so you've given a simple exercise already, and you have a number of other exercises in your book, but when and how often should it be practiced?
Yeah, I would, start small. If you've never done this before, it'll be eye-opening for you. I can almost guarantee that. Start with 5 minutes a day. That's plenty. Just get a place, and you don't have to do any kind of yoga posture. Just sit in a chair is fine. Just go someplace where you're going to be undisturbed, and let people know. Don't want phone calls. Don't want any discussion for the next 5 minutes or so. And then just focus on the breath. You can, if you go to my website, there are 3 different guided mindfulness exercises that you can also they're part of the book, but you don't even have to buy the book to be able to get those. So you can get one of those if you like, or all 3 of them if you like, and try those. But start with just 5 minutes and practice it once a day. That would be fine. And you begin to notice, try to bring it into day-to-day life as well. Don't try to become mindful in your trading right away after a 5-minute practice session. That's not going to happen. Okay? This is a skill we're talking about. And skills, like, it'd be like somebody picking up a tennis racket for the first time and hitting a couple of balls, getting it over the net. And now they're saying they want to go play in Melbourne in the Australian Open. Well, you're not going to be successful, right?
Yeah.
It takes some time and some effort and some dedication to get this down. So you need to practice this. But you can also do mindfulness in ways that are not too challenging. For example, at the end of the night, you sit down and you want to go through your charts and see how the markets that you traded, and see where you kind of do your charts and see where you might have missed trades or what have you, whatever your process is. A lot of times people will sit down and they'll say, oh, I wonder what's going on my favorite website, my favorite trading website. And they get distracted and they go over to their website rather than looking at their charts.
Yeah.
Be mindful here. Notice that your mind is trying to pull you out of what you need to do, and just recognize it. Say, oh, I'll do that later, and go back to, we call that mental parking. I'll park that desire to look at my favorite website. I'll park that for now. It's almost as if, you come into work in the day and you park your car, you leave it in the parking lot, and then after work, you pick it up again. You might have a fantastic Porsche or Maserati or whatever, this beautiful car, and you'd love to be able to bring it into your office, but that's not practical. You park it there, right? Well, it's the same thing in mental parking. We want to park that kind of mental chatter, if you will, for later. And it is fun to look at our favorite websites. I do it too. But now is the time to study our charts. And so apply your mindfulness there rather than trying to be mindful in not cutting a winning trade short, for example, if that's something that you have a tendency to do. Allow yourself to build up And so you go from 5 minutes, maybe the first week, try 7 or 8 minutes the second week, and then 15 minutes. And you can build, 30 minutes a day is the magic number to, based on research, to get solid results from this. So you want to gradually build yourself up to 30 minutes a day.
Okay, thanks, Gary. That was some great advice there. Just before we start wrapping up, I'd just like to ask you, there was a section in your book which I was quite surprised to see, and that was around exercise. Now, I mean, we all obviously know the health benefits of exercise, but can you briefly explain how exercise can impact trading?
Yeah, it's probably not something that people would think about, but if we could bottle up exercise, the results of exercise, it would be a wonder drug if we could do that. And of course we can't. But aerobic exercise is very valuable, not just for health benefits, which are enormous, but also for our mental outlook and our mind. We know from studies of people with depression where they get very sad and it's hard for them to get out of bed during the day, and they just don't feel good about themselves or about the world and don't think any of that's going to change. It's very good. I mean, it's as effective as psychotherapy, and it is as effective as taking antidepressants. Same thing with anxiety, which is, nervousness and worry, being worried and anxious. Exercise helps in that regard as well. So, for traders, it's a really useful thing to do. And I know some of the best traders in the world have a big running program, or they go rowing or biking or what have you, but they do that aerobic exercise. So it's really valuable to do, not just from health, not just from a health perspective, but from a mental perspective as well.
Yeah, okay. All right, thanks, Gary. So we'll just start wrapping up now with some quick closing questions.
Sure.
What's the biggest lesson you've learned through trading?
The biggest lesson I learned is to manage risk. That's the most important thing that you want to do, always to manage your risk. We never know whether a trade is going to work out or not. Even the very best trade setups are probabilistic in nature. So they have a probability of winning, but they also have a probability of taking a loss. And you really want to always, first and foremost, be thinking in terms of risk control. That you can control, right? And that's what you want to do, and not let a trade get out of hand on you so that you're damaging your account. And I've had firsthand experience with that for sure.
I think we all have.
Yeah.
Okay, what do you think is the most important attribute a trader needs to become successful?
I think it's diligence, and it's a willingness to put the effort in. Trading is not rocket science. There's nothing in trading that you can't do, that the average person with average intelligence can be successful as a trader, but it requires a consistent, you got to practice this stuff. I hear this from traders all the time. Oh, if it doesn't have money behind it, it's not worth doing. And I don't know, how can I say this strongly? That's poppycock or nonsense. It's BS. You want to practice. I still do it. Even after all the years that I've been trading, I practice. And I do a program on Thursday evenings, which would be for your time zone in the morning. And I've got quite a few traders from Australia and New Zealand, your neck of the woods, in the program, even though I live near New York City. It's called deliberate practice, and we go through charts and trade them bar by bar. Inevitably, psychological issues come up, and we have an opportunity to discuss that as well. But that kind of practicing beyond your edge of abilities, is a really valuable thing, and it's the way to get good at anything, trading included.
Okay. Now, I usually ask about a favorite trading book, but perhaps you can just give us a quick bit of info about your book.
Well, Trade Mindfully is all about using cutting edge psychological skills to improve your trading. And the first part of it is the section on discusses primarily fear, but the things that get traders into trouble from a mental perspective. The second part of the book is all about how to deal with that. We talk about mindfulness. We also talk about fusion and diffusion, kind of advanced mental skills to take ourselves away from believing what the mind is telling us moment to moment, and being able to defuse from that and understand that the mind isn't always telling us useful things, but that we want to follow our trading process, whatever that is, to be as consistent as we can be in our trading. And then the last part of the book, I've taken what I've learned out of sport and human performance psychology and brought it into trading. And when we look at trading and psychology, really there's only three things that a psychologist can help a trader do. And that is prepare better, execute better, and then deal with their results so that they can learn from them and then prepare better from that learning, execute better from that learning. Again, assess and monitor, make adjustments in our preparation and our execution, and that cycle goes on and on. And that is the performance aspects of this book, and I discussed that in the last section, so that traders have a actual process that they can follow. Process always is going to beat results. Always the most important thing that a trader can do. And so I lay out a basic process of preparation, execution, and assessment that traders can adopt for themselves and adapt to their own way of trading.
Yeah, and finally, what's the best way for listeners to get in touch with you?
Through my website. It's www.tradingpsychologyedge.com, tradingpsychologyedge.com. There's a wealth of free stuff there. There's a way to contact us. I run a blog, have different courses in reading the market bar by bar without indicators, which is even useful for systems traders as well. I mean, you want to understand how the market is moving by its own actions, and I've become skilled in that over a long period of time of study, and I teach that to folks as well who are interested. So yeah, tradingpsychologyedge.com, and you can see all my stuff there.
Yep. Okay. Well, thanks so much for chatting with us today, Gary. Is there anything else you'd like to mention before we wrap up?
No, I think that's it. Just, trading is tough. It's a difficult thing, and it requires the effort. And so if you haven't been successful, but you have a real ardor and a real desire to become successful, focus on the process of trading and get that down. Focus on the mental side of trading. Really, the technical side, we put a lot of effort into technicals, but and very little into mental. And really, we should be flipping that around, putting most of our effort into the mental side, not so much into the technical, because the technical is fairly straightforward. So stick with it. Don't give it up, is what I would say.
Yeah, thanks, Gary. Well, thanks for sharing the concept of mindfulness with us today. It's quite different to traditional trading psychology methods, so I think it was really interesting to get a different point of view. So thanks again, and I wish you all the best for the future.
Andrew, thanks for having me. It's been great. It's been a real pleasure.
Cheers. Thanks, Gary. Some interesting insights from the chat with Gary this week. Here are a couple that I picked up. Firstly, the story of Captain Sullenberger landing the plane in the Hudson River. He experienced a number of strong emotions, but he put all of his efforts into focusing on the things that mattered at that point in time. He wasn't thinking about the passengers directly. He was focusing on all the steps required to land a plane safely, like correct speed, angle of the plane, wings, etc. As traders, we can take the same approach in times of emotional stress, focusing on the tasks that really matter, like trade execution. The second point is being mindful brings us into the present moment. Being mindful applies not just in trading but other areas of life too. When we're doing something that requires focus, our mind can often interrupt us. I've started using the mental parking technique by acknowledging the idea and quickly jotting it down so I can get back to the original task. And what I've found by doing this is that I can maintain my focus for a longer time, plus I often find that when I come back to the idea that interrupted me, it's not really that important. It was just a distraction. Now, as we mentioned in the interview, Gary has a book called Trade Mindfully, which applies cutting-edge psychological techniques to trading skills, allowing traders to improve their mental outlook and maximize the potential of their trading strategies. The book draws upon recent psychological research in behaviorism to teach new approaches for better focus, more confidence, and more positive perspectives and outcomes. Now, Gary has kindly provided 3 copies of his book to give away to Better System Trader listeners. So all you have to do is head over to the show notes page at bettersystemtrader.com/27 and you'll see a link to submit your email address to enter the draw. The 3 winners will be drawn next Sunday, the 11th of October, so make sure you enter as soon as possible. Don't miss out. Anyway, that's it for this week. I hope you enjoyed the chat with Gary. Thanks for listening to Better System Trader. Catch you next week.
Thanks for listening to the Better System Trader podcast. The next step is to head over to bettersystemtrader.com for more expert tips, practical advice, and exclusive content. Catch us next time for even more great ways to improve your trading here on Better System Trader.